The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box. These are your headlines. Semi-conductors front and center with numbers from top equipment maker ASML hitting the tape, while shares in TSMC drop after Republican nominee Donald Trump says he wants Taiwan to pay for US protection from China. How about this? A big rotation going on. The Dow rallies more than 700 points to close at a fresh record high, driven by optimism over Fed rate cuts as the bull market broadens beyond tech.
Europe's largest lender, HSBC, appoints Georges Elhedery as its new group CEO, with the current finance chief set to take over in September. And Adidas posts a second quarter beat and hikes its full-year guidance once again as trainer fans lap up its retro offerings. We have numbers crossing from ASML at this hour. This is on the second quarter, and it's reported 6.2 billion in total sales, 1.6 billion net income in the second quarter of 2024. The gross margin 51.5, and there is some watching of this number. It had reported a gross margin of 51% prior, so that was in the first quarter. So we're seeing 51.5 here, slight lift from that level. The forecast is seen between 50 and 51%. So it looks to be a slight beat on this line today. The second quarter basic EPS is at 4.01. That revenue number, just to pour back over the second quarter numbers, the 6.24 billion euros is versus a lower estimate. So it is also a beat on that line. The market had an IBS estimate of 6.03 billion. So topping out on the revenue print. On the gross profit number, 3.21 billion is the number that has just hit the tape this morning. In terms of net bookings, 5.56 billion, net income of 1.58 billion. That is also well above estimates. In terms of the third quarter, we're now getting some outlook statements here on gross margin that is seen 50 to 51%. So roughly whereabouts we are traveling today. Slightly lower end in terms of the 50, though, if you take that range that it is talking about. The outlook for the third quarter revenue seen between the range of 6.7 billion to 7.3 billion as it reports these numbers today. Overall, semiconductor inventory levels continue to improve according to the CEO. That is the line we're getting. We expect the industry recovery to continue in the second half of the year, according to the CEO. And the interim dividend, 1.52 euros per ordinary share, will be made payable on the 7th of August. So a couple of lines here. Of course, we've been talking about technology overnight through the lens of the RNC. Trump also talking about the relevance of Taiwan. ASML, a very large player in the industry. And a big run up in the stock, as you can see so far.
And we will break down those results further and get a wider view of the chip sector with Ben Barringer, global technology analyst at Quilter Cheviot. That's coming up at 7:30 Central European time.
Let me take you to some of the action we saw stateside. The US boards, again, we had a bounce of 1.8% on the Dow. So a lot of the action concentrated to that Dow Jones Industrial Average. A very strong rally there, 740 odd points to the upside. The run we've now had on the likes of the Dow, best performance really for a number of months. Also, it is the fifth positive session in a row, so that fresh all-time high that we saw on the intraday action, but also on the close. The rally, United Health, we had numbers out from that company. It was powering the market forward. Interestingly enough, it was Microsoft that was one of the laggards. So big AI plays not actually delivering some of the numbers we saw on the market levels yesterday. Nvidia, for instance, also to the downside, impacting the performance of both the S&P and the Nasdaq. It was the other players from United Health to the likes of some of even the banks in play yesterday. 0.6% to the upside on the S&P, modest gain for the Nasdaq. So quite a switch in terms of the performance on these major players in the markets. Let's take a look at those big stocks that were moving to the upside and downside. United Health, as you can see, a rally of 6.5%, somewhat of a fade again in Nvidia stock, and there have been some questions again around the valuation and whether more breadth is warranted, whether there are better bets to play for markets at this stage in terms of single name exposure. Nvidia 1.6% to the downside, still whopping performance so far year to date and also over the course of 5 years. Let's take a look at what we're seeing on treasuries. The backdrop here is still a huge focus on the politics, thanks to the events of the weekend and the focus of the RNC around Trump this week and what Trump policies could mean for the market. The yield, we're still watching for any implications for the long term, 4.16. Got to say, monetary policy in focus too, thanks to Jay Powell and suggestions that we don't need to get back to that 2% target before rates start getting cut. We're 4.43 at the short end. To the dollar. And what we're witnessing this morning, sterling euro trying to make some gains versus what has been a stronger greenback in recent sessions. You can see inclined higher. Dollar yen this morning, we're seeing slightly weaker, about 0.1% to the downside. Again, a lot of talk about the intervention that may have been happening in the backdrop here in recent weeks. Let's take a look at gold, and some of the focus has been on this in regards to Trump's comments around Taiwan and as to whether the US would be a natural backstop for any further saber rattling from China. What you've got 2466 spot gold seems to be drifting morning session. To the Asian markets, and the early picture has been a weaker one across on Japanese stocks, down 1/3%. Hong Kong flat, slight drift for the Chinese markets, but we're firm out of the Australian market. It is showing a gain of 1%. Steve.
Thank you, Karen. Right, let us move on. Shares in TSMC are ticking lower in the wake of comments made by Republican presidential nominee Donald Trump, who said Taiwan should pay the US for protection against China. Okay, claiming, and I say this in inverted commas, Taiwan took our chip business from us. Let's move on. In a wide-ranging interview for Bloomberg Business Week, Mr. Trump also said he'd allow Fed Chair Jerome Powell to serve out the rest of his term in office and said he'd consider JP Morgan chief Jamie Dimon for the role of Treasury Secretary. I wonder if Jamie Dimon wants that job. I read the article as much as I could anyway. It's an extraordinary article in many ways. Meanwhile, chip makers are moving sharply lower in Asia after Bloomberg reported that the US is mulling imposing the most severe trade restrictions possible amid a chip crackdown on China. It reports that the Foreign Direct Product Rule, which allows the US to impose controls on foreign-made products using American tech, could be imposed on Tokyo Electron and ASML. Wow, there's a lot going on there. I don't know if our next guest wants to get involved in that. We'll keep him on the economics. Actually, that is about the economics as well. Maybe we'll get him on that. US retail sales. Well, did the retail sales put a bit of a spanner in the works? I don't know if they did, but they were pretty good. US retail sales were unchanged in June, but if you look at the control group, they were quite. If you strip everything out, the gasoline and you name it, they were actually really very good. Way better than the expected drop of 0.3%, whilst May's figure was revised higher. Core retail sales, that's the point, surged almost 1%. Traders, oh, bless them, they're now 100% certain. That's jolly good, isn't it? 100% certain there or thereabouts that the Federal Reserve will cut rates by or in September. Traders are pricing in 93.3% probability that the central bank will cut rates by 25 basis points from the current level. Meanwhile, the Fed Governor Adriana Kugler said she's cautiously optimistic that inflation is coming down to the central bank's 2% target. Aaron Captain is the chief economist at UBS. I laugh not because you're the chief economist, because I don't know where to start, because there's so much to talk about. And I don't even know if we'll get to Trump, which is something for the future maybe we'll talk about. Why don't we start off with traders? Traders who have been unambiguously wrong about when the rate cuts are going to come and the magnitude of the rate cuts. Now they're 100% certain about September. Are they right to be?
Well, not just the traders, also the economists. So.
Oh my God! Now I definitely know there's not going to be a cut.
So
sorry, I jest.
I think there's Powell started the signal right in the interview on Monday. So I think that last CPI print was obviously very important. It wasn't just the CPI print though; it's also the acknowledgement that the economy has been slowing, which they were in denial about, I think, until recently. Then you get a retail sales print like yesterday, and then, of course, you become less certain again. So I think, to sort of say it's 100%, it's never 100%. I think we have 2 CPI prints to go before that September meeting. But it looks highly likely at this stage. I think that step down in the rent data is hugely important for them.
Powell was talking about the evidence that's been gathered in the second quarter so far, which has been in contrast to the first quarter. So just magnify that for us in terms of what it's telling us so far.
Well, it's the difference between inflation no longer going down and inflation running at a 2% annualized rate. So I think it's the problem with all the data is we have this COVID echo. So there's this incredible seasonal distortion, which is make it very difficult to interpret the incoming data. So I think actually the Q2 data has been a little bit flattered by, I think, these seasonals. If you use pre-pandemic seasonals, then the disinflation, doesn't look as strong, but also by the same token, Q1 doesn't look as bad. So I think, there is sort of this continued progress, and at this stage, I think it really is enough to start cutting.
In terms of, enough to start cutting. Now there's some words, isn't it? But by how much? Because you know what? One thing I loved about the US market moves, in fact, I love the US market moves every day because there's always a story. Most stocks were up. 3/4 of companies were up. United Health was 219 points of the Dow. Caterpillar was up 4% as well. The mythical rotation away from technology, if it ever happens meaningfully and for a sustained period of time, it showed signs of life yesterday as well. And technology did zip, as Karen said at the wall earlier on. NVIDIA did zip. In fact, if anything, some of the big names were negative as well. The mythical rotation into broader cyclical, broader America, that was taking part yesterday. In fact, the Russell 2K is up big double digits, decent double digits in the last 7 sessions. If we start getting rate cuts, that is obviously a catalyst for that as well. Does that give legs to the rotation? And I know you're an economist rather than a strategist.
Yeah. Look, so the price action last week post CPI was utterly confusing, right? So you would think if you're going to get cuts, you're going to get some boost to tech stocks, and it didn't happen, right? So we saw this, as you say, we saw this rotation. You saw the Russell 2000, I think, jump up quite a bit. There's really nothing at this stage in the economy that's other than, I think, sort of the positioning that warrants a lot of optimism about the non-tech part of the economy, right? If you look at sort of the expectations for earnings growth now in the second quarter, I think for tech it's like 21%, for everything else is 1%, right? So yes, we're getting some things moving on the basis of, I think, very little economic data. And so the question then becomes, is partly what we're starting to see sort of a front running of the US election result, right? Because that, I think, is the, why would Russell 2000, why would that suddenly have a lot of enthusiasm? In part because if we do get a Trump administration or a red wave, we're going to see what we saw in 2016, a very large increase in small business optimism. We're obviously going to see a lot of deregulation, a lot of things that I think have been hampering, I think, the sort of the non-top tier of the U.S. equity markets, I think, is going to start to benefit from that. So, and I think based on what the events of the last week, I think certainly there's a little bit of that going on. So I don't think it's just about CPI and the Fed.
Do you think the Trump trade is impacting global money flows at this point? Because I was noticing in Japan yesterday, it has been cited that there was some Trump trades going on even in the Japanese market. If you look at what's happening in Europe, there seems to be just lack of appetite to buy European stocks, and whether that is money being diverted elsewhere because of some sort of Trump trade. I mean, how would you think about these flows?
So one thing you can do is you can look at, our desk strategists have created these baskets of looking at what are the type of stocks that would benefit from Trump and what would benefit from another Biden administration. And what you mainly see, I think, looking at those baskets, and I think we have them both for Europe and for the US, is that there's been the surge in the Trump basket and actually no decline in the Biden basket, but also there's a clear sort of outperformance now of the sectors that would benefit from a Trump presidency. And you don't just see it in the US, you also see it in European equity. I don't think we have those baskets for Japan, so I'm not sure about Japan. But what I struggle with is, so other than equity, I sort of struggle to really disentangle how much the market is pricing here, because it's not just about sort of fiscal and taxes and regulation. We're also going to get the tariffs. Now, the tariffs which is going to be unambiguously bad, I think, for the whole world, but you might not get them until the second half of next year, right? And so that's just a bit early to start pricing.
There is a school of thought, and again, I go back to one of my favourite interviews of all time, and I had this earlier on this year, sitting by the short. Yeah, it was with you.
Okay.
Yeah. No, it wasn't. It wasn't. I'm lying. It was with Richard Koo. As much as I love you, Aaron, I love Richard Koo as well, in a purely professional way. And Richard was there talking to me all kinds of things, and talking to me about the balance sheet recession that was in Japan, that is in China potentially now as well. But he was also talking to me about unfettered free trade and globalization, and that it works in many, many levels. but it doesn't work in other levels, and it hasn't worked for many Americans, for millions of Americans. So for us, and for those West and East Coast elites, for the metropolitan elites to say, global free trade, it works, it works, it works. Well, try telling that to people in the Midwest. Try telling that to people in the Rust Belt as well, because they clearly haven't seen the benefits. So for you and me and Karen to have our lovely intellectual debate about the disasters of protectionism and the joys of free trade, for them, this is completely the wrong side of the equation. And don't get me wrong, Richard wasn't saying free trade is a bad thing. He was just saying for a lot of people, it ain't working at the moment because and this is the point he was making, the deficits, the trade imbalance is so large that those people are disenfranchised. So I will go back to you, and I'm arguing with myself, by the way, as usual, and say we are wrong to say that free trade always works for all Americans and for all people. And actually, there's a lot of people who are not enjoying this free trade, and actually, so as such, more protectionism might actually be seen as a good thing for them.
And so I agree with that, and I agree that it hasn't worked.
It's a brilliant argument, isn't it? Yeah.
Well, no, it's a very convincing argument. I think the data actually supports it. But of course, what goes missing in for the pro-free trade people is that what's supposed to go along with it is redistribution, protection, retraining, which never happens, right? So I think, why do people feel left behind? I think it's for all those reasons. It is interesting. I mean, people like Angus Deaton, Nobel Prize winner, is openly questioning whether, the economics profession, for instance, got something wrong here, that it was, and it's a little bit like the debate about capital controls, 25 years ago, everyone was for pro free capital flows, and they had to rethink and say, actually, maybe that's not such a good idea. So I think there are certainly elements of, look, it's all just on a spectrum, right? So no one has pure free trade or zero protection. And so that's the way I think the tariff camp is sort of framing it. It's like, no, this is just another distortion, like we protect labor and we protect the environment, and this is just another one, we're protecting people, and then it just becomes a degree of how much protection. And I think that's where the market gets a little worried, because the amount of protection that's being talked about is so large that it will, I think, have a severe impact on the countries where the tariffs are going to be imposed. It will have an impact on growth. It'll also have an impact on inflation, because the magnitudes of what they're talking about are so much larger than in 1819, that certainly if your focus is not on the left behind people or a generational thing, how do we bring these people along, but your focus is on sort of 1 or 2 years of macro data, then this is a pretty big deal.
And it's why you get the rise of the AfD, it's why you get Marine Le Pen, it's why you get Brexit, it's why you get these movements in the United States, the Tea Party. People have got to wake up to this. As I say, I'm not saying you're part of the East or West Coast elite, but there is a degree of intellectualism. Sorry, I had no
I'm glad you mentioned Europe, because I wanted to go there with the distortion word that you just used. And this is the word that was used when it came down to those tariffs on Chinese EVs, that is about correcting some of the market distortions. If you see a United States that is much more protective, where does it leave Europe, which has just been tiptoeing towards sorting out any market distortions, not talking about protectionism?
Well, so Europe will have a problem with the U.S., I think, in another Trump administration, right? So I think what frustrates a lot of the people in the I wouldn't just call it the Republican camp. I mean, I think in the tariff camp is that there are these structural deficits, not just with China, but also with a bunch of European countries. So they're going to want to do something about that. And so my expectation is that Europe would respond the same way as in the first administration, which is they will retaliate, and they'll try to be relatively proportional in that retaliation. But then separately, they have the issue that they're also sort of aligned in their concern about China, right? And so, and I mean, you ran the story, I think, earlier on ASML and a few other companies. They are tiptoeing, because, of course, that is a huge market for them, and so is the U.S., and you have to somehow try to sell to both. And how they deal with that, I think, is unclear. So what you've seen so far is they'll sort of go along with the U.S. and say, okay, well, maybe we won't sell the top-end chips, but we'll sell the other ones, right? And so they'll try to find some middle ground. But how that gets navigated under a new administration, I think, remains to be seen.
So what we're hearing here is a timeline that could be impacted by the politics stateside. What does it mean for monetary policy? Because at this stage, we've got lack of commitment from a lot of central bankers about future rate cuts. And is that the right pathway if we're going to be talking about
that's why
more
the
tariffs?
timing of these tariffs is so important, because I think of that as a potentially large stagflationary shock. And if it were to happen in January, which it won't, then I think that would pause the Fed from doing anything. They'd want to sort of sit back and wait and see what happens. Does growth go down? Does inflation go up? What do we do? But actually, the realistic timeline, I think, for the China tariffs is probably more something like the middle of next year, because you need notice and comment periods. And then for the rest of the world tariffs or the European tariffs, that's probably late next year, if not 2026.
Because we're as big a foe in Europe as the Chinese, apparently, according to the Republicans.
It's the legal basis of doing the tariffs that just makes the timing a little bit difficult for Europe.
We've already had a brilliant chat, and the directors have very kindly let me have one more question to you. We talked about tariffs. Well, as much as we'll get bellicose reaction from the Chinese, and goodness knows what the reaction will be, that is the last thing they need at the moment, because their economy is not, 4.7%, I'm struggling to see 4.7% from everything that Karen's been reporting on the luxury sector, from everything I've seen out of the industrials, the export figures, the global trade flows. It just doesn't, the consumer appetite, I don't see 4.7%. Maybe I'm stupid.
Well, you're not, Steve, but that's the annual number, right? So Q&Q annualized about 2.5, right? So that's a little bit closer probably to where true momentum is. No, look, they have a problem because the impact of those tariffs. So our calculation, we put out a note, I think just this week, is that if you get 60% tariffs, then that's about a 2.5 percentage point hit to Chinese growth. So now they could stimulate, and then you could take some of that off, but then you're looking at Chinese growth next year that's closer to 3, not 4.5, right? So yes, it's a big deal.
Thank you. I thoroughly enjoyed our conversation, and you've woken us all up. So I just love these conversations. I like going to the big picture stuff as well, these existential free trade versus capital controls and tariffs issues. So thank you. That was brilliant. We took it all over the place. Didn't get to Europe too much, but we'll do that next time with Aaron as well. Aaron Captain, part of the Zurich elite, I should say, and chief economist, he doesn't want that, chief economist at UBS. Meanwhile, HSBC has appointed current chief financial officer Georges Elhedery as the new group CEO, replacing Noel Quinn in September. Elhedery has been co-head of the lender's global banking and markets division, which includes its trading and investment banking advisory businesses since 2020. HSBC shares are flat. Well, that's probably the reaction he wanted. I don't think they'd have wanted a big decline on the back of that number.
Coming up on the show, Donald Trump's former rivals Nikki Haley and Ron DeSantis offer a united front as they both endorse Trump for the Republican presidential nominee. We'll bring you more from the party's national convention. Plus, Adidas once again hikes its full-year guidance after a better-than-expected second quarter. We'll have more later this hour. And earnings season continues. Don't miss our first on CMC interview with Assa Abloy, CEO. That is up at 10:15 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
Former GOP primary rival Nikki Haley gave her strong endorsement to Republican nominee Donald Trump on the second day of the Republican National Convention in Milwaukee, Wisconsin, saying she was glad to accept Trump's invitation to speak in the name of unity. The former presidential candidate made her pitch to Republicans still unsure on the party's nominee.
There are some Americans who don't agree with Donald Trump 100% of the time. I happen to know some of them. And I want to speak to them tonight. You don't have to agree with Trump 100% of the time to vote for him. Take it from me, I haven't always agreed with President Trump. But we agree more often than we disagree. We agree on keeping America strong. We agree on keeping America safe. And we agree that Democrats have moved so far to the left that they're putting our freedoms in danger. I'm here tonight because we have a country to save. And a unified Republican Party is essential for saving her.
Gotta love politicians globally, haven't you? Their ability to pivot is quite extraordinary. Meanwhile, House Democrats are circulating a letter for signatures that urges the DNC on that side of the aisle to cancel plans for this is very interesting, for a virtual roll call on Sunday to officially nominate Joe Biden as presidential candidate. This amid continuing concern over the president's age and cognitive ability. The letter, seen by this channel, says stifling debate and prematurely shutting down any possible change in the Democratic ticket through an unnecessary and an unprecedented, in virtual comments here, a virtual roll call in the days ahead is a terrible idea. Well, Biden stands by the virtual roll call, and speaking in Las Vegas, he repeated his call for unity.
It's time for an important conversation in this country. Our politics has gotten too heated. I've said the Oval Office on Sunday night, as I made clear throughout my presidency, we all have a responsibility to lower the temperature and condemn violence in any form. You got to remember, in America, we're not enemies, we're friends, we're neighbors, we're fellow Americans. Most importantly, we must fully and firmly reject not only political violence, but violence of any kind, period, no exceptions. We have to say with one voice that violence is not the answer.
And for a wrap of all the top action after a busy second day of the Republican National Convention, check out CNBC.com.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.